Potential tariffs on China, Europe, and Mexico are expected to add pressure on retailers already grappling with a more deal-conscious consumer. Yahoo Finance has had the chance to speak with a number of retail business leaders over the last few days at the World Economic Forum in Davos, Switzerland. Here's what they've had to say about the potential implications of tariffs.
In the first Trump administration, we saw the first wave of tariffs, and we reduced our China exposure by 50%. We aren't waiting for the next wave of tariffs. We've been working to continue to move our product elsewhere.
We've lived with tariffs already. It's not a new concept, and we've been able to navigate that. It likely translates into higher pricing for consumers at the end. Yeah.
More on this, let's bring in Simeon Siegel. He's the managing director at BMO Capital Markets. And Simeon, it's very much a wait-and-see mode, I think, right now for the markets, just in terms of what is going to happen for retailers, how they are adjusting. But from your base case scenarios, how big of a hit, how big of a challenge do you see this being for the retail landscape here over the next several quarters?
Good to see you, Sean. I was seriously thinking of coming in some outerwear just to feel like we're in Davos and not feel left out every time I see Sazi.
I'm with you.
See there, but
next time.
Listen, I think that what we saw and what you just heard from your prior guest is there's a lot of uncertainty, to your point. And I think that what's fascinating to me is tariff is something everyone wants to talk about, but tariff to the consumer is just another cost that goes into the equation. It's no different, and it is different, but it's no different than cotton or labor costs, or just if the cost to ship a good goes up. The consumer is looking at the end good, and we're talking about this very classroom-esque. We're talking about this as if we're at like a lecture in a big business school class, but at the end of the day, the consumer is either going to pay more or they're not. And so I think like we're talking a lot about which country is going to do what, but I think also what we need to think about is which product is going to do what. I think where is the consumer going to tolerate higher prices? Because if they don't, prices don't go up.
Well, then let's get into that from both an investor and a consumer perspective. Which companies are best positioned to win when it comes to that ability to increase their prices and have consumers put up with it?
So, yeah, I think that makes a lot of sense. I think that's the right way to think about it. The way we're thinking about it is there's consumer wants and there's consumer needs. So is it a staple? Is it something you need to buy? Is it milk? Is it gas? If the cost for something you need goes up, you're going to need to spend it. That's where we've seen inflation. On the other hand, within the wants, are they companies that have some control? There are companies in the want categories that are doing really well, that are selling at full price, that don't have a lot of discounts. And then there's a lot of companies in my world that don't have that luxury, that are actually seeing, after years of price hikes through the pandemic, are now seeing some pushback. And so I think, to me, I think we're going to have to look and say, okay, let's disaggregate between needs and wants. Needs are very different than the conversation, than the discretionary world that I'm looking at. But right now, if you had trouble selling your jeans at full price last week, I don't think all of a sudden tariffs are going to give you a lot of permission to go back to that consumer and say, no, we're going to add charge. I think the consumer is going to say, good luck, you can try, but I don't need your pair of denim. And if you're going to want to sell it to me, you're going to end up promoting it. And so there the question becomes, okay, for those companies that don't have that luxury of doing that, how do they approach it? They either have to absorb the cost themselves, or they need to start cutting corners and taking some quality out or finding savings elsewhere, like we would do for any other cost inflation uptick, even if it's not called tariff.
And so you have the tariff threat. You also have the rhetoric that we've heard from President Trump, and he's differed a little bit when it comes to maybe some of the things that we've heard from Scott Bessent, just in terms of the strong dollar and what ultimately the Trump administration would like to see here over the next 4 years. But that then further, I guess, complicates the picture for some of these multinational companies.
Yeah, and I think what your guest right before me pointed out, which I think makes a lot of sense, is not just the cost side for the tariffs, it's also the potential retaliation that we see on the other side for the actual revenues these businesses are going to do in those regions. And so I think, like you said, it's multivariable game of chess here. I think what you are doing if you're a retailer is you're trying to create, or a brand, you're trying to create the most compelling product at the most compelling price to sell it to your customer. I don't think that changes one way or another. I think the nuance of figuring out how you're going to get there and what your margin's going to look like will. But I think it's still your job to go and convince. There are plenty of businesses. Sean, you and I have talked about this. There's plenty of businesses, I think, over the last year that have shown an ability to take market share. I think through COVID, it was all about clustering. It was all about, are things good or are things bad? And we looked at it from this high level. It was all about the macro. But over the last year, you watched LVMH and Kering tell you luxury was problematic, and Hermes and Prada tell you it was great. You watched Adidas and Nike tell you that it was problematic, and Hoka and On tell you it was great. Coach did great, Kors did not. Like, you have these runs across every subsector, and that just means companies are doing their job. And I think
Yeah.
that's where we are. And so my suggestion, for what it's worth, I think, like, listen, there's going to be, assuming this goes through, so we have to play through what the numbers actually are, that will be something the companies are going to have to deal with on the want side, dramatically more than the consumers are going to have to deal with. Because at the end of the day, inflation is judged by what the consumer is willing to spend, not what the cost actually goes up.
So,
if they're not willing to buy that product, inflation never ticks up.
So which specific retailers are best positioned to win under a tariffs regime?
I think the best part is it's the ones that are winning now. I think, so you just brought on a few people that were saying we've been looking to mitigate tariffs. We've been looking to move our product sourcing outside of China, outside of Asia. We watched a lot of them go to Mexico thinking that was going to be incredibly safe. And then look where we are. And so I think that at the end of the day, any company, very few companies that are entirely domestically sourced. That just is a very hard thing to do. And so recognizing that almost every business I look at, almost everything that we wear has some touch point done outside of the US, well, you're going to have to then say, okay, rather than which of the companies that are most and best situated to deal with the sourcing, I think it's which of the companies that are most resonating with consumers. I think at the end of the day, that's their job. The job of these companies is not to dance around the politics of what is the tariff going to be, what is it not. The job is to figure out how to make the most compelling product and how to price it accordingly. Now, obviously, the supply chain matters tremendously. We watched that happen during COVID. So the back end does matter. The cost to create that product is infinitely important. But the job of the company is to be able to get the right price for the right good to the right consumer. I oversimplifying it, but those are the companies who do that best. Those are the ones who are going to win. And I just went through we're seeing this market share, which I think is really encouraging. I think it's actually more encouraging to see divergence of performance than it is to see everyone winning. When everyone wins, you don't find out who's actually doing a good job. There's just wind at your sails. There's stimulus. There's lack of product out there because supply chain shut down at the beginning of COVID. In a real life environment, you're supposed to have winners and losers, and you're supposed to have them across the high income, across the low income, across goods, across things. It's everything. It's the whole idea of kind of, we're simplifying it. I think you want to find who's winning, who's not. Those who are winning, those who have the ability to take price, those are the ones that'll be able to continue taking price. But again, that's on the want side. The need side, the staples, that's different.